Finance.
So excited, I could dance.
Finance.
Everybody, raise your hands.
Finance.
I can feel it in my pants. Actually, it's bananas. So excited, I could dance. Everybody, raise your hands. I can feel it in my pants. Actually, it's bananas. They hear me yelling, they're like, pardon, you bitch. The secretary's in the crib. It's straight mafia shit. It's still Fed gang. Let the bangs hang with the grip. The rag's blue, like my blazer. She's a favorite crip. Granny J back in the mix. Yeah, I know you missed her. Name Janet, but I'm yelling. I ate Michael's sister. We run the game, y'all silly. That's all, really. About to ball like a player with that for Billy. And this will make all of us safer.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks rose on Wednesday after the US government entered its first shutdown in 7 years, putting hundreds of thousands of jobs and billions of dollars in output at risk. Meanwhile, key ADP jobs data showed private payrolls declined in September, widely missing estimates, but helping to virtually cement bets on near-term rate cuts. And actually today was fairly green, led by the mega caps, excluding Meta. Meta just didn't perform here today, down 2.16%, but it was one of the best performing mega caps coming into today. Google up 0.8%. Amazon and Tesla held it up here for the discretionary space, both up 1%, and Tesla up 3.51% after some good insurance data out of a couple of European countries. Apple was up 0.78%, Oracle up 2.21%, Microsoft kind of flat, and then Nvidia and AVGO were fairly green. There's some very positive developments happening with Intel and semiconductors. We could see Intel was up 5% right here. MU was up 7%. And a lot of the equipment manufacturers, as well as the hardware names as it pertains to Intel, also very, very green. And this is all in the Intel deal. We'll talk about it a little bit later on. Healthcare, especially these drug manufacturers, were very, very positive. Some of the credit services names were also pretty positive. And then other than that, it was mixed price action in the rest of the market. It really just was a mega cap or large size story here today, especially which was led by healthcare. The second day in a row of healthcare being up more than 2%, in fact, just shy of that 3% gain here on the day, followed by utilities, XLY technology. These sectors were up in a very big way, with the S&P 500 gaining 0.42%, but the RTY also up 0.25%, so not too shabby right there. Real estate gain. However, it wasn't all sunshine and roses. We saw everything from energy staples, industrials, financials, materials, and even the comm services sector led by Meta. They were all in the red, and especially the bottom three, financials and comm services, really holding the overall index back. But all in all, stocks gained, and it was actually a broad-based rally. We saw a little bit of churn here in the mid-cap component of the market. Mid-cap growth, mid-cap core was down 0.5 percentage point, 0.14 percentage points. And however, we did see large size across the board gain. We did see small size across the board gain. And this was amid a government shutdown. The US government is officially shut down. Congress and the Senate failed to reach a budget deal. So this is going to play out. Donald Trump came out and said, expect a lot of firings. Hopefully they could get this sorted very quickly. Hopefully we only have, less than a week or so of a shutdown, but it really depends. I don't know how prolonged or protracted this is going to be, but this is possibly the worst case scenario for the average American who is working for the government. Sure, they get back paid once the government reopens, but in the here and now, things are not looking too good. Don't really like to see this. However, it is what it is. And on the back of this news right here, we also got ADP's monthly employment report, and it showed private payrolls unexpectedly declined this month. You could see the private sector lost 32,000 jobs. The report said missing a gain of 50,000. That was the consensus right there. So the ADP employment numbers missing by a very wide margin. Now, this is probably the best employment data we're going to get unless the government miraculously reopens by Friday and then we get the non-farms number. So we got the jolt there yesterday, which was pretty good, nothing crazy. It continues to show a moderating labor market, and we got the private payrolls numbers right. Now, this was down 32,000. The market's somewhat brushing this data off, and I think what they were really looking at was the manufacturing data. We got the ISM PMIs and the employment figures right here that came in at 49.1, beating the expectation of 49. Now, we don't actually have the consensus numbers here for the employment manufacturing numbers, but we did actually improve compared to the same time last month. So all in all, manufacturing looked pretty good, but still in contraction territory below the 50 mark. Private payrolls not looking too good for the market, looking beyond that. And then looking at some of the market movers we saw today, Intel was up nearly 6% after a semaphore report said the chip maker is in early stage talks to bring AMD on as a customer for its foundry business. It is not clear how much of AMD's chip business would be manufactured by Intel, but this is a massive deal for Intel, and we would expect an Nvidia deal very, very soon as well. And Intel stock has been one of the best performing stocks in the S&P 500 this year. Another market mover was Nike. Its stock was up 6% after earnings and sales topped forecasts, and the company continued to show its turnaround progress. Nike reported adjusted earnings per share of 49 cents compared to Wall Street's estimates of 28 cents. According to data from Bloomberg, revenue increased 1% year over year to 11.7 billion, which was higher than the 11 billion that was expected. And Reddit, bit of a dumpster fire, was down 11% amid new data that showed the use of its content in leading AI chatbot ChatGPT had plummeted through mid-September. So investors not really liking that news at all. And then for everything we saw today, there was 3,400 advances, 2,800 declines, great market breadth. We saw inflows in the NASDAQ and the New York Stock Exchange, with the S&P 500 rallying here, gaining, and then market momentum continuing to be as it has been for the better part of the last week. The 5-day and 20-day continue to be below the 50% mark. However, the longer term and medium term moving averages are above the 50% mark, which is exactly what you want to see. And ultimately, the market is simply rallying because market momentum, market breadth, and market flows continue to remain on the side of the bulls. Now, looking at the chart, guys, you can see equities fairly green despite this government shutdown news. Very, very interesting stuff. The market obviously looking beyond it, and you can see the S&P 500 gaining 0.41%. The NASDAQ roughly similar, slightly outperforming the S&P 500, but all in all, a fairly bullish day despite what you would consider to be downbeat news, especially with that ADP report. However, the market is forward looking, and that's all we're doing right now. When we look at other indices, international stocks gained, China stocks gained, Indian stocks gained, Middle Eastern stocks were roughly flat. Crypto absolutely ripping. Ethereum up 4%, Bitcoin up 3%. We'll talk about it. And you can see volatility tick down. Yields moved down as well amid the government shutdown, along with the dollar, as well as some of the economic data that we got. Again, those ADP numbers pretty much all but assuring that we probably will get another rate cut here in October, at least 25 basis points. We'll see what happens. But all in all, we're probably looking for about another 50, maybe 75 basis points worth of cuts through the end of the year. Gold was roughly flat. Silver continued to gain. Silver actually really, really moving. Silver just going parabolic, even more so than gold, and then TLT was down ever so slightly. But when we look at all of our market indices, that's another all-time high for the S&P 500. Yeah, if we close right now, the market is still open, guys. We're looking at another all-time high for the S&P 500 to kick off October. And I've been saying this, the first 2 weeks of October tend to be actually very, very positive. We saw the market somewhat front-running this move, as you can see right here. Let me just zoom out a little bit, guys. You saw the market somewhat front-running this move right here, but it looks like we're going to close at an all-time high for the S&P 500. That is the same for the NASDAQ 100. Let's see the Russell 2000. Not quite, but this was an all-time high right here. And we are pretty much trading at all-time highs for the Russell 2000, the RSP. That's the equal-weighted S&P 500, the mid-cap S&P 400, and the S&P 600 as well, guys. So this market looks incredibly strong. And I think ultimately, right, any dips we do get in this market, you want to go ahead, buy those dips. I was looking for a dip right here, but it looks like the bulls came in, took us right back up to the 6,700 area. I wouldn't be surprised if we reach 7,000 in the market. And even if we do pull back to the 6,400, even as low as the 6,200 area right here in the S&P 500, if the market was to pull back to these levels and we were to consolidate right here, I would still be buying those dips right here simply because earnings is looking really, really good. We got rate cuts on the table, favorable policy from Washington, with regards to deregulation, and this AI trade continues to power along. You want to be long in this market, particularly in the S&P 500, particularly in the Nasdaq 100. And any dips we do get is a gift, guys. But kicking off the fourth quarter with an all-time high in the S&P 500. Can you believe that? S&P 500 0.4%. What's also rallying today is crypto. Bitcoin is taking some of the highs we can see right here. Now, if we just actually zoom out, you can see we bounced off this key resistance 109 area where we used it as support multiple times, used it as resistance multiple times, and now we use it as support again, and we are moving. And ultimately, we are starting to approach these highs right here. Price discovery at these highs. The second we can break above this, right, and then move, but all we need to do now is break above these highs, use it as support, and then we can target these all-time highs. We do know that once resistance turns into support, it becomes strong support, and normally the foundation for us to go higher. Very positive developments in the crypto space, particularly as it pertains to Bitcoin. And we do know that M2 money supply continues to move higher. Credit creation and money creation continue to move higher, and that bodes well for Bitcoin and Ethereum. Ethereum is up 4.26%. You can see it looking very technically sound. Yeah, forming a higher low relative to this low right here in the context of making an all-time high. So I do expect Ethereum to continue to move higher. But with regards to taking a high, it's probably looking at the 4,800 area. So the bulls do have quite a bit of work put in, whereas the Bitcoin bulls, right, they're looking at taking the high right here. So Ethereum does have a little bit of a wall to climb, but it definitely can do it. And it's holding this 4,000 level, and that is very, very positive. Now, when we look at other stocks like BMNR, right, this is an Ethereum Treasury company. Ethereum is up 4% today. BMNR, if we go ahead and look at it, it was only up 1.52% today. So, I mean, there's a little bit of alpha here. You probably could go ahead, buy Bitmine. We continue to see NAV compression. And if you actually just look at the Bitmine price chart, right, we got a low, we got a higher low, we got a higher low right here. Now, in the context of putting in a high and then a higher low and then a lower high as well. So what does this mean? Ultimately, it means what we need to do now is go ahead and retake this high right here. If we can go ahead and do that, right, follow through, we can then go ahead and target this high right here. But ultimately, the first price target we need to go ahead and take is the 64. Let's just call it the 65 area here for Bitmine. We go ahead and do that. Bob's your uncle, and then we can go target the highs at the $72 region. I'm very bullish on Ethereum. I'm very bullish on Bitcoin. And I also think if you want to play a Bitcoin treasury company, just buy the best, buy MicroStrategy. Now, it hasn't acted super well, but I do think we probably are looking at a bottom put in. And if this is the low, right, this would be a higher low relative to these lows right here that we made in March, in April, relative to the tariff tantrum situation. So I do think that if you don't want direct exposure to Ethereum or Bitcoin, I prefer exposure to these. You can look at these treasury companies. Again, if you do want levered exposure, that's the way to play. Now let's quickly look at some of our other proxies we haven't looked at in a while. International stocks, European stocks breaking out. Is that an all-time high? It looks like it is potentially an equal all-time high year for the stocks 600. Very, very crazy. Looking at the ISRA ETF, we made an all-time high just yesterday. We're at near equal 52-week highs for the KWEB index. And then when we look at the INDA ETF, okay, we're not at 52-week highs. In fact, this chart doesn't look too constructive at all. But all in all, I mean, this is a global market rally. You can see Europe is breaking out. Middle East is breaking out. China is breaking out. The US is breaking out, guys. All in all, this is very, very positive. We're seeing liquidity in these high beta assets as well. I mean, Bitcoin, even though, we have been trading sideways, this is pretty much at the all-time high. The all-time high is 124,000. We're trading at 118,000. Ethereum, the all-time high is 4,900. We're trading at 4,300. We're trading roughly at these all-time highs, guys, across all of these indices, and that is very, very positive. Something else that's trading at all-time highs is gold, absolutely breaking out. Another somewhat average day here for gold, up ever so slightly. Guys, if we get a pullback in gold, if we get a pullback all the way to the 3,400 area, this would be a dip buying opportunity. We'll see if that happens, but gold technically breaking out. And something else that's also really moving is SLV silver. In fact, silver is outperforming gold this year on a year-to-date basis, and it is absolutely breaking out as well. So don't fight the trend right here, and all dips are to be bought. We're in a global bull market rally driven by liquidity and rate cuts, and more liquidity is about to come online. Do not fight the trend. Do not fight the Fed. Do not fight the tape. Just buy the dips. And diving into sentiment, this is Goldman Sachs US Equity Sentiment Indicator, which measures US equity investor positioning versus 12 months ago, and it has rebounded from the 0.9 area to the 0.6 area and well off the 2.5 lows we saw here in April upon the tariff mess of Donald Trump. And what we're seeing right here with this indicator is that positioning is not in stretch territory. In fact, it's probably a little bit light, and this could be fuel for the upside. And we do know that October tends to be a very good month for the S&P 500. In fact, the first half of October is the third best 2-week period of the year. And if you actually look at the second half of October, it's not too shabby as well. But let's not get ahead of our skis. You can see right here, the first half is very, very bullish. So do expect the momentum to continue in the near term and the long term. You don't ever want to fight the tape or the Fed. The story is simple. Non-recessionary rate cuts are usually positive for rate cuts, and there just isn't a recession right now in the macro. However, we do need to be aware of the risks. We got the JOLTS data yesterday, and we're going to talk a bit about it because it's very likely with this government shutdown that this might actually be the only data we get in terms of labor market data, at least from the BLS. Job openings ticked up in August from an upwardly revised level in July, but using a 3-month average, they edged down to the lowest level since the reopening to 7.26 million. The ratio of job vacancies to unemployed workers also ticked lower. And for private sector workers, the job vacancy rate held at 4.5% in August, unchanged from July and down from 4.7% a year earlier. Quits edged down to 2.1%, matching the cycle low. The hiring rate slipped down to 3.5%, matching the cycle low. The layoff rate also ticked down to 1.2%. And all we're really seeing right now is a labor market that's not hot, it's not cool, it is moderating and it is cooling, but it's still a relatively stable with the unemployment rate at about 4.2% as it is right now. So yes, the labor market is cooling, but nothing is deteriorating or falling apart. When we look at data for the rest of the week earnings, there really isn't much of anything for the rest of the week. And I don't know if we'll actually get any of these data. We probably won't get initial jobless claims. We'll see how this all plans out. We have a Fed speech and then factory orders. If we do get these, the numbers we're looking for is 223K and 1.4%. But I highly doubt it, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.